What is going on, everyone? Welcome back. It is episode 581 of the Vant Rant. Got all three of us here today. The boys are back in town. Market getting a nice little squeeze here. I'm sure Mark's happy, and I'm sure Mao's getting his puts ready. Been I was gonna say slow day, but just kind of whatever day so far. It's getting there. Definitely some headlines to talk about. You've got implosive, not implosive Adobe earnings, but implosive price action following Adobe earnings, a big merger and acquisition news. Got the rail strike being averted potentially. I got some headlines out there and a slew of economic data. But first and foremost, before we dive on in, how was everyone's trading today?
Good. Another good day for me from the trading standpoint, because, again, I only traded the first hour.
Yeah.
What about you, Ty?
Yeah, you must have been trading those damn stocks again, because I tell you, I got murdered today. It was not a good day for me.
Yeah,
Really?
It was good from a stock, and it's really been a stock market the last couple of days as far as stock pickers market.
Mm-hmm.
I mean, look, we talked about it, right?
We
talked about it's quad witching.
Mm-hmm.
And you have the largest expiration since 2008. So, and we talked about from a ES standpoint, we were I saw no breakouts below 3,900 or or past 4,100 that, I figured they're going to just ride us right in between this range. So, to me, no news. We're just trading back and forth in the range, guys.
Sure. Yeah, and that's a good point. We got a big old quad witching tomorrow, so that's maybe we get to stretch our legs after that. I wouldn't be surprised if we were pinned in here before some of that lops off. Though I didn't actually look yet if there was any concentrated levels in particular. That's gonna be one thing I definitely would know going into maybe tomorrow's trading and maybe even into the close. But yeah.
So. I mean, 39. There's huge puts sitting expiring at 3,900, 4,000 level.
Okay.
We kind of talked about if we break that 3,900 level, then look out below, because then you got the dealers going to have to start hedging themselves, and you're going to have to watch that accelerated gamma squeeze to the downside.
Feel free to pull up the charts and show that, because that actually happens to be a pretty much major support level right now in the market anyway, at least in the the SPY, that 390.
No, absolutely, and that's exactly where we were telling. It's where we said yesterday in the mentor meeting. It's what we said this morning, and that's why we traded. We pretty much traded the first hour both days. Had killer days as far as our recommendations, but let's look at it. And Ty, I mean, if you look at this. Look where the SPY bounced off to the T.
Yep.
Your little target zone. And so, if you look at this chart, I mean, why are we going up? Because we hit our level, and now we're bouncing. We're back above this trend line here.
Yeah, I mean, I don't think it breaks the strong technical support unless there's a fundamental change, which maybe is OPEX. So.
Right. Yeah. I mean, we got to get through OPEX, to really get any kind of lead way. But you never know. It's always tough trading through OPEX. But look, we're still heading to the lows, if you ask me. Looking at the 4-hour chart, what do you guys think? I mean, nice little piercing right here.
Yeah, it definitely feels like we're setting up for for ourselves to go lower. Yeah, nice little kind of lick below wick or whatever today before we got this little Vant squeeze here going on. But I'm not expecting anything prior to tomorrow. Even maybe we get something tomorrow, but I think next week, however, is also the Fed. So we got a couple things coming in, and after that scorching hot CPI print, I'm curious what we see.
Right.
I mean. Who expects the market to bottom before the Fed? I mean, you're not going to get institutions put big positions on in front of and especially when now we're battling. All right, is it going to be 100 basis points? Is it going to be 75 basis points? I mean, it's amazing how this action here with the readjustment from the CPI has pretty much readjusted everybody. Before we're talking, okay, it's going to be 50 to 75, and now we're talking 75 to 100. So, as an institution, you're not going to be sticking your leg out in front of that one.
Yeah.
15-minute chart, nice little bounce back above VWAP. It's still below the 5 EMA on the long-term chart. So, staying out of those long-term positions. So a little bit. You can see here the intraday action. This is that level that we said, look out. I mean, and you can see this is classic OPEX action to me, especially after a long drop. I mean, yesterday you had, okay, everybody's looking to see if we're going to see continuation. So they drop it in the beginning, kind of sucker in people, then they drive it up. Then they create a new low, sucker in those shorts, and then they drive it up. And then to make it even worse, you have now even a new low right here going into the last half hour of the power hour. And then they drive it up into the close. So that's just nasty action. And we pretty much advised you guys to stay out of this action in here because it's just, this is what you get.
Yeah, absolutely. This is exactly what you get going into events like this, and I agree most positions. And it's funny, if you could pull up the chart real quick, because last time I was on the show was, I think, about September 7th, September 8th, and it's funny because we talked, it was me and Tyler, we warned about something that Mao had put in the Discord, and Nomura had warned about, where there was record amounts of puts being put on in it from institutions, and there was a potential biblical squeeze coming, and then lo and behold, those 4 days following, we started to have almost a biblical like squeeze, and then CPI took the knees out from under that. But it's sometimes those warnings and the tradings and things that you would expect, it's not that hard to expect stuff like that and see stuff like that. So yeah, I would agree that we're not going to see anything, but I thought that was a pretty funny observation on that, but CPI kind of ruined it.
We knocked out those 4 days in one sitting.
A big old headline that can changes the landscape for the Fed. Will definitely do that. That's for sure.
Yeah, and that's what we said. It's a fundamentally changing event, and so when you have action like this that we saw on Tuesday, really, what the market's doing, and we kind of talked about it too. Me and Ty did. With the VIX, when you look at the VIX, and we're going to look at the VIX in a minute, but I can pull it up here. The fact that the VIX didn't really spike, I mean, it did spike, but look, I mean, this is not panic selling in here. Yeah. So the fact that the VIX didn't really spike like we've seen in the past, I mean, you can see when you see panic selling on days that weren't even as bad as we saw on the SPY, right? As far as on Tuesday. So we didn't see the panic selling in here. This really, to me, was a recalibration of, we got new fundamental facts, and the market has now recalibrated itself. Now the question is, how much is priced in at this point, and where are we going? And but if you look at the volume just completely tapering off, and the reason is because again, we got OPEX, and really not going to know until Monday what we got going on. I also talked about it yesterday that Friday starts the buyback blackout period for a lot of corporations. So we, and this, Nick, we've seen a lot of this fuel to run the markets has been based off just buybacks from big corporations. So that blackout period starts Friday. That's something to take of note. It's going to take away some buyers. So I'm thoroughly looking for a nice little drop starting on Monday, into next week. I think it will be a little bit sideways action because of the Fed, but traders really want to see what's happening. But there's no way you can get around this. What happened? The news that we're getting, there's no way to get around it. Is not positive. I mean, we're basically knocking out all the bull narratives one by one. Yeah. So what are the bulls going to cling to? I mean, if you're thinking we're going back to all-time highs here out of this, I just don't know what the narrative is.
Narrative. Absolutely.
But it's a tough market. It's a tough market. I mean, if you look at tech, nice little doji candle here, you can see tech's not that far away from testing testing the lows as some of the other indices are. So tech, it doesn't have far to go, if you ask me, to get back down there, because it was kind of a laggard going up, which you would expect with the rates rising the way they're rising.
Yeah.
And again, we kind of talked about this, Nick, and I won't go too much into it anymore, but if you compare where real rates are from the tip and you compare it to tech, which is Q's, every time we've been out of whack, tech has reverted back to where real rates are. And you can see here reverted back, okay, out of whack, reverted back, and now we're out of whack again. So I thoroughly expect tech to really just kind of revert back down, as they have every other time that they've you've seen rates and tech diverging. And that's the issue. I mean, for you guys, for you bulls out there, I mean, every time we've had inflation, because right now real rates are negative rates. We're still dealing with negative rates. So every time we've had inflation, the Fed raising 75 basis points, 100 basis points, that does nothing to inflation, right?
Yeah.
And every time we've combated inflation, I think it was up 5% back in 2008. The Fed funds future rate, which is about 2.75 now, needs to go above where the CPI rate is.
Yeah.
And we're nowhere near that. So the Fed is nowhere near where they need to be able to combat any of this stuff. Now,
and the problem is there's no way they can get up there. They just can't. They'll break everything if they were to start doing that probably. But
they're as you see, and we'll get to that in a second. But they are breaking everything.
Yeah.
I mean, what did we get today? As far as numbers, we got retail sales.
Oh, we had a lot of numbers.
Yeah, we had a lot of numbers. Do you have those, Nick?
Yeah. So, all right. Let's dust off all the numbers. So first of all, we had the Atlanta Fed coming out here saying, that good old Q3 GDP estimate, we've already cut it twice. And at September 1st, it was 2.6%. Then 6 days later, they lowered it to 1.4%. Yeah, they're like, we're cutting that again. It's now just 0.5%. So we're almost in contraction territory. We're getting there. And on top of that, we had average 30-year mortgage has, by the way, reached a new high since November 2008, 6.02% as of, I believe, today. Industrial production missed, contracted negative 0.2% versus flat expectation. Core retail sales missed in August and actually revised July lower. They also had the jobs market actually came out and that actually beat pretty substantially, which has people scratching their heads. And that's also not good because that means that they're not getting a tight labor market. So, Powell can do what he wants there, I suppose. They had weak import-export prices, disappointing industrial production, like I said, and capacity utilization. So all of the industrial numbers just terrible. I think that was the headline ones. There may have been some smaller ones, but it was just pretty ugly across the board for the most part.
Yeah, it was ugly across the board. I mean, Ty, you were trading. What were you trading this morning, Ty?
Everything. Gold, oil, the Dow, pound, yen.
Yeah, well, it was a bad day, I guess, to trade all those, right?
It was, especially when you're on the wrong side of the train there. You gotta hop on the wrong train.
Well, that happens. I get on the wrong train all the time. Well, I guess, the one thing is, if you're a bull, the one indice that really is kind of being the outlier that's kind of been the leader here is small caps. And you can kind of see, small caps closer to their 200 than they are the lows, which, are the exact opposite of the other indices, and kind of holding in here. They're not down where this little previous low was. They pretty much have only cut out maybe 70% of this run up, so they didn't come back and completely eclipse this. So small caps trying to be the leader, trying to hold in here, but still guilty till proven innocent, still under this 50 moving average. So but we're still using IWM as our leader for the market. So that's why, when tech and everything was kind of just pushing down today, I don't know. Just no desire to go short, especially at lows.
Yeah, absolutely.
Especially with this holding this 100 in here. So small caps holding in there. Dow, just a disaster. I mean, the Dow is just the Dow. I mean, it is green. It was red. So it has come up pretty good from where it was, but just no desire to look at that. Looking on, rates aren't giving you any breather. So 10 years still trying to bust through this 3.483 level right here. I think it's going to do it at some point. And, bonds are, right now last week we said bonds are saying one thing, stocks are saying another. Well, bonds, we said that follow bonds. I mean, they're the smartest market, the smart money. It's what's supposed to be in bonds. Not bad. And don't forget, we still have some other issues like the rail strike that's still sitting there. And I know there's been a tentative agreement, and I think that's why a lot of people are kind of excited about it. But that tentative agreement, because we have one of our traders that actually is part of the union, the rail union actually, and the tentative agreement only means that it's time for the union to vote.
Right. Right. Yes. Yeah. So I actually didn't know that one of the traders was part of that. That's interesting. But yeah, it's there. There's the tentative agreement. We'll see if they vote on it. There was one of the railway unions kind of was out there saying we're not sure if we're actually going to still accept this. But I really think this is my prediction. I think that they'll take it because there's a couple things here. The Congress has a nice fat thing in their back pocket called the Railway Labor Act, which can essentially come out and say, you're not striking anymore. Like, this is what's happening. And and it'll essentially substitute bargaining and arbitration and mediation for the strikes. And this was passed over 100 years, almost 100 years ago, because rail, for those who don't realize, and I'm sure you do by now, if you watch the show or even paid attention, rail is a very big deal. It's over a third of our trade, and it's a third of our freight, and we do not have the trucks to be able to obviously make up for all of that. And you've got hundreds of thousands of barrels of oil alone that are transported every day via rail. It would cause serious issues. Now, I'm sure we've talked about this to death. But the issue is, and this is why I think the White House, not just the White House, but the administration's in such a bind here, is because rail workers are treated, and this is as a husband of a teacher and son of a nurse, are treated worse than teachers and nurses probably, in terms of at least some of the benefits. They get 0 sick days, paid or unpaid, and they're incredibly understaffed, which is the only kind of the real comparison I wanted to make, like teachers and nurses, where they've cut, I think, a third of the workforce of rail workers in the last 6 years. So we've actually lost a third of the workers, and they're trying to get to a point where they can have one worker per train, which is obviously, they're trying to do what they can, but it's also dangerous. So they can try to force it. They cause that workforce to diminish. It's going to put a further bind on things. So they can force the unions to take an agreement. That's not going to stop people from saying, well, fuck this, it's not worth the money. And also, they have not had a contract for the last 3 years because of arbitrations. So railway workers for the last 3 years haven't gotten any extra benefits or any extra raises because there's been this long-standing arbitration and things going on. They haven't had a contract for 3 years. So there's that extra incentive for these people to strike. The deal that was put out prior to yesterday, I think it was told that 80% of the rail workers would have rejected it, as was. If they take this one, we'll see. I don't know, but it's just a nasty thing to deal with here.
I was told by Mike that one of the unions has already rejected it, and that basically,
I didn't know if they outright said or
at least the voting is 70% leading to reject it, which you need every union to vote yes, or else it doesn't get approved. So just from our inside source, not looking good, but I guess we'll see. I mean, I haven't really seen anything, and I saw a news item that said, Amtrak's getting ready to resume service on Friday, and it hasn't even been voted on. So
we're going to get looked into for insider information now over here.
Well, and that's what I said. I mean, we were looking for some insider information. I was even joking. I said, "Don't worry, I won't trade off of it."
Right.
No. Yeah. So I mean, even if I had the inside information, I don't even know where I would put my money, frankly, in this direction, because I think both sides are in a bind. Are the rail workers really going to try to hold out, and is the White House really going to try to force? And so I frankly don't know what side's going to bend here. Especially since they've accommodated already to an extent. They weren't far off, frankly, in my opinion, from what they were asking versus what they finally offered. They raised a little more. It was like 24% raise over the next like 5 years, and they wanted like 30 over the next like 7 or something, or 8. So I don't know. It's to partially make up for the back 3 years that they haven't gotten a raise. But I don't know. So yeah, I'm not it is definitely something that we need to keep watching, but it's definitely going to be it's not going to help the Atlanta Fed Q3 GDP estimates. Let's put it that way.
No, it's not going to help supply chain constraints, which are finally getting back to normal.
Mm-hmm.
It's not going to help that we're already into some think is a recession with 2 negative printed GDP quarters. So you definitely don't need another thing on the bingo card.
Yeah, and it would most definitely cause oil to start going back up in fucking costs.
So looking at junk here, junk bonds, we look at junk yields for risk-on assets, just not really getting off the mat. Which interesting to me, Nick, is if you look at not high yield, that was high yield, but if you look at corporate debt, investment grade debt, performing worse than and falling off worse than what we're seeing in the high yield sector by a little bit. High yield, had been down. It's not down by its lows, and if you look at corporate debt, down by lows here. So and it's kind of, you got a lot of different weird things going on in the markets just like that, where you're seeing some relationships not following suit. You're seeing some things that are just, it's hard to really look at. But, that's about it here looking at the markets. But, I'm curious because the dollar seems to have kind of floated all over the place. And oil keeps on flirting with that level tie that we talked about.
I know. It's frustrating. That's why the last couple of days of my trading has just kind of been not so great, because everything after the CPI print has just been kind of just hanging out, but I mean, looking at the dollar in here, I mean, it's not falling off, obviously, which is a positive thing. The main thing, there's 2 ways, there's 2 cooling periods. There's either after a big move, you either have a sideways consolidation or you have a pullback. And right now, you're really seeing that sideways consolidation in almost all the markets. Looking at the dollar down to lower time frames here, you're seeing that sideways consolidation. It's respecting levels, and it's hanging out at that 109.770 level that I've been mentioning as that, that breakout point from 2002, which is where we've seen that rejection. So I really think that since we're consolidating at highs, we're not retracing this big CPI move. It makes me feel like we're going to get a pretty strong breakout here through highs once we get through OPEX and the Fed. And so it just we're maintaining structure here. Now, if we do break off and break through 109.30, this support area right here, then I think we get a little bit of a retracement from CPI, and then we'll reanalyze fundamentals at that point. Because if we start retracing CPI move, then there's probably going to be some other change in fundamentals, whether it's the Fed, whether it's whatever else we got in the next couple of days. So we'll see. But right now, we are flagging a bullish flag here at highs, and I'd expect a bullish continuation here. Moving on to oil. I took a loss in oil today. I have a problem shorting something that's at a major area of support here. Obviously, there's just 86. I've talked about it plenty of times, and I don't like the shorts there. So I ended up actually trying to take longs on the lower time frames in here. It was like right in here. Obviously it didn't work, and it just ended up selling off for the day. But it's going to be interesting to see, you know, what happens here, because I was taking a look at it, and it's starting to break through these lows here. We're finding some dip buying come into place, but we're entering that liquidity grab area like below 86. That it's like dangerous territory for oil. And I mentioned that it's going to have a tough time breaking out really anywhere, because you have two sides of the story of IEA and you have the OPEC kind of disagreeing with the demand. And then you have potentially a breakout, you know, a nice squeeze in the dollar 2 days ago, and have a potential breakout. So oil's having a tough time here. But looking at this overall area, it's forming, you know, more or less an inverted head and shoulders here. Really, it's at the bottom of it. If it starts breaking below where it's at now, I think it's game over, and oil heads down lower. But, you know, if we do find this rejection wick, we do find a rally out of here, then we could have a nice potential squeeze to 95, 96. But that'll require...
That's a nice inverted head and shoulders you just drew right there.
Yeah, it's not bad. I mean, it's pretty nice. You got the leg, the shoulder, the head, right? The shoulder, and then potential leg here. It's just tough because, I mean, really, in order for it to break through here, you're going to have to get the dollar to not break out, or you're going to have to have some type of, you know, OPEC or IEA. This range is tough right now.
Yeah, you know, Mark, it doesn't matter what inflation is going on in Japan. They have effed up their currency so bad.
With the currency.
It's their currency. You got to understand, their currency is so effed up. This is where the Fed's heading if they don't, you know, break something at some point, right?
Yeah, it's not even about inflation.
It has nothing to do with inflation. It has nothing to do with anything, you know, because the currency is basically, they've been, when you talk about stagflation and you talk about deflation, that's, you know, that's really been Japan. And, you know, they're so effed over there that, you know.
Yeah, and if they don't intervene in the currency, in the Forex market, which is what they were talking about yesterday, the yen falls. If they intervene in the Forex market, the yen falls. So it's a lose-lose situation right now for the yen, and they're just trying to verbally abuse the Forex market right now to try to prop up the yen, and it's not working. If you look at USD/JPY completely shrugged off that down move yesterday from when they were verbally abusing the Forex market right there. So price action is telling you that the yen is going to continue to fall, and it's like Mike said, it's not based off of inflation. It's based off their monetary policy and you know, not supporting their currency.
They're completely broken. They've been completely broken for 2 decades.
Yeah.
So just realize that when you're looking at, you know, and that's why, to Mal's point, I mean, look, we've talked about the dollar. It's the most overcrowded trade that you're going to find, which typically, I agree with you guys, would mean that thing's going to come crashing down, right? But the problem is it's a relative value against a basket of other currencies, of which the euro is 1 or 56% of that basket. So if the euro is going to keep on crashing, and they're going into this darkened winter that we feel they're heading into, how can the dollar come down?
Right.
Nobody can explain to me, okay? Nobody can explain to me how the dollar can come down, other than it's a crowded trade.
Yeah. Yeah. Exactly.
You know.
Yeah.
I just, the way I'm looking at it. Oh, congratulations, Mo.
Congrats, Mo. That's awesome.
Everybody, guys, everybody hit the like button, please. Everybody congratulate Mo for
baby girl
on the way.
Man, congrats, Mo. Nice. Nice. He's gonna have her make sure to get her a nice, you know, college fund set up and MSGS and all your favorite stocks, and
good stuff, man.
Good stuff. Congrats.
Yeah, welcome to the club.
Yeah,
you're outnumbered now in the family. Sorry to say, but you know.
Exactly. Good stuff.
Dollar comes down if there's a recession. You have an initial push down, but ultimately the dollar actually rises in a recession overall after the initial drop.
Yeah, and again, we're in a unique situation where Europe is so more effed than we are.
Yeah, by far.
So it's a situation of where's the safety trade, which is the stronger place to really, to have a currency be of value. And to me, it's the dollar.
Yeah, especially if we're raising 100 basis points potentially, or it continued 75, and the euro's maybe doing 50, and yen's doing nothing. Where are you going to park your money in fucking a country that doesn't have a high return on your money, or one that has high inflation and no high rates? It's just Now
we'll say, and Peter Schiff is going down on this boat. He has been going down on this boat. He's been saying for a while, right? And this is where when I say we're in a freaking weird world, man. I'm used to gold being in inflation.
Yeah, Peter's about to get buried with the gold that he's got.
Yeah, I mean, and there's that inverse relationship with the dollar. I mean, you know why gold's staying down? By the way, while you were gone, Nick, Born Alarm said gold's sexy. So we were gonna run I'll put a gold.
It is if you own puts.
We're gonna dress it up. Well, we're gonna dress it up in a nice, sexy bikini with a thong. But,
man, like a gold bars.
With a gold bar. But you know why gold's been down? Because the dollar's been strong, and so because there's that inverse relationship there. But like Peter. The reason Peter is going that way is because the typical relationship in inflationary period.
Inflation, you buy gold,
You buy gold, and it should be going up, and the dollar should be coming down. So there's a lot of weird things going on, and I think to me, look, we can't really go back. We can't go back and really look at past relationships, and we can only trade what we're seeing and the structure of the product. And the reason is, we've done something that no other country has done. I mean, excuse me, the world has never done. We shut down, we took somebody and shut their heart down.
Mm-hmm. Yeah.
And so, we saw what happened with inventories, the bullwhip effect. We saw what happened with supply chains. So a lot of this stuff is just reverberating back and forth. And then you add a war in there and how we're reacting to the war. You add the policy and how we're reacting to oil and our treatment of commodities. You got all kind of cross currents going on, and it's something that really, as a trader, it is truly a unique period of time for me.
Yeah, yeah, definitely. I want to finish up gold and Bitcoin, then Mike and Nick will answer your gamma questions for the quad wishing and stuff. But gold, again, I lost some gold, and it was tough for me because, yesterday I even said, look, I think we get a nice extended drop in gold here. But again, it's tough for me to want to sell at the level that we are at, which is why you saw this massive sell-off. Because when you're at a level here, you're either going to get a massive sell-off and it's going to bust through, or you're going to get a rejection and it's going to have a little bit of a pop. And I was going for the latter, and I thought we were going to have a little bit of a pop here because we were shooting some rejection wicks. We were at that 1680 level, that double, triple, quadruple bottom that I've mentioned on the daily 1,000 times. And I was looking for a little bit of a pop here, but I just didn't feel comfortable shorting at that level, and it would have worked well. But now it's kind of setting up for beautiful trades following here. Broke through 1680, broke through this long-term trend line that's back from 2015 here that I've showed you guys yesterday. And now we're broken through the liquidity area. And so there's one of two things that's going to happen. We're either going to continue down and keep marching down towards like maybe 1600 even, or we're going to shoot a V for victory and we're going to engulf this move down, close back above 1680, and this was just a nice strong liquidity grab to then march back up higher, where then I might look for temporary swing longs. So, which is unlikely in my opinion, but that's one of two things going to happen. And so I think we have some pretty decent trading opportunities incoming for gold maybe next week. If you look at the weekly chart's just absolutely just bearish engulfing through this big ass area where we have rejection. So we'll see where we close after OPEX tomorrow, but it could have some really nice moves in gold.
Awesome.
Bitcoin, Bitcoin is, Bitcoin, Ethereum. So Ethereum, I know you guys have been talking about the merge for the last few days, thinking it was this week, and you obviously, you're right. The merge went on today. Merge went through.
All done.
And look at it. I mean, it's just the problem is you have like 5 other phases, and we don't know how it's going to work out yet. So I don't think people are buying up into the hype yet. Obviously, it's exciting because this could mean the start of a potentially sustained crypto system, cryptocurrency system, and people accepting it more once energy, usage comes down and they get better, through the hacks, because apparently the proof of stake is supposed to be better for hacks as well, because it's going to cost them like $50 billion or something to hack instead of like 5. So it's supposed to be better in the long run. A lot of cool things, but it's just not crypto's time right now, which is why I think you're not seeing that excitement in there. But yeah, Bitcoin, Ethereum dropping. Continue to drop here. Bitcoin is below 20,000. We are in this area that I mentioned yesterday where, if we're going to hold up, this is it, because this is where we had that liquidity grab. We had the consolidation, accumulation phase in here. And so we now tap the bottom of it. So now do we rebound out of here or do we drop? Most likely drop, because I think we're dropping in the market as well, but we'll see. Bitcoin's either going to hold here or it's going to, drop. So that's it. I'll hand it back on over to you guys. I can take it over.
Cool. Yeah. Well, feel free to take over the charts, Mike, if you want first, and you can talk about some of the stocks you were looking at, anything else in the market. I know Mo and Borderline were going back and forth about potential gamma squeeze or something like that. Yeah. I don't personally see it happening. It's definitely possible if we get over, 4,000?
Yeah, here's the current gamma levels right here. I pulled them up for you guys so you can see it. A little bit blurry, but I think you can get the point. This, if you look on the SPY, the 390 to 400 level, it's where we've been bouncing. It's where we told you guys to watch out. And the point is, what you got to look for here, and this is why we said that 3,900 level. You got to be careful, because if we break below it dramatically, then you got all these puts become in the money, and then they really the dealers gonna have to hedge themselves. And it works the other way too, to the upside to an extent. But there's been a heavy, obviously with the type of markets, a lot of protection was put in. There's heavy put concentration. So really the risk of a squeeze is more to the downside than there is to the upside going into this cycle. So I don't see some kind of squeeze to the upside out of here. What I see is exactly what we're getting, and it's exactly what we told you guys to look for this week. So you guys had a great game plan this week. Look, we traded the first hour, the last 2 days, just killed it, knocked it out of the park with our list. Just stay out of this action. You don't need to really just chop yourself around the rest of the day. Don't partake. Let everybody else chop themselves around. We had a good list today, Nick. But first, before I get into the list, I want to look at some of the some of the risk on sentiment. Tyler going over Bitcoin and Ethereum. Look, I just come on. Just break finally and get down to 10,000. That's what we're looking for. Right. We haven't been sucked into that at all. A lot of people that were looking for the Ethereum, push up out of the merge, not happening. Okay, so it's risk basically off there. Interestingly enough, you get a little bounce today in biotech. So you got the XBI above the 50, kind of crunching into the 200, but still, I don't count that as like, hey, risk on. If you look at the semiconductor index, look at this. That tells you risk off and tells you we're heading to a recession. The transportation's not really doing anything either. So transportation index doing a little bit better today, maybe in that reversal because of the rumor of the strike and stuff like that. But you are seeing the shit stock squeeze today. ARK doing a little bit better, up almost 4%. So they're buying the trash. Now, financials are doing pretty well. That is one little outlier I did want to kind of bring up. But again, and TAN, from a solar standpoint, still hanging in here, Nick. Look at this. This is where we made all our money over the last couple months, has been in solar. We've also done well in the EV market. You look at this PBW, which is alternative energy, with, plug and all those. So stay with the sectors that are still working, which is solar and alternative energy. And I still think, I still think oil is a dip buy going in here. So I'm still looking for, and we did pretty well this week looking at the oil dip buy. We had a rock star list, and it started this morning. It started with Netflix, and I did not take this trade. I'm really upset. This is one of our top trades that we were looking at this morning in Netflix. Look at this thing. I mean, just would have gave you a nice run. It gave you some opportunity to get in. I just didn't do it. And, on me. But just nice run in here. On Netflix. Actually, you have Netflix had a catalyst yesterday. They had some positive ad news come out. And matter of fact, let me go back to the 1 minute. You can see this little spike here, right?
Yeah. It also caused them to get an upgrade or two today because of that news.
Exactly, which caused the upgrade, which caused the gap up. So this was all positive. I mean, if you look here too, the bottom of this little ledge here was the high of this gap up here from the news. So this was very positive. Seeing this action, guys, very positive going into the open here. And so this is why this was our number one stock this morning, that we were kind of ready to go. And unfortunately, I got caught deer in the headlights looking at something else, and this thing just kind of went. And it went good. So for those of you in our trading mentorship group that caught it, good for you guys. And it's actually helping all the stocks across the space. So you got Disney, that, Disney's looking interesting here. I mean, you got this ledge. I'm not ready to buy Disney. You can't convince me to buy Disney. I think I can get lower. But Roku, look at Roku getting that nice 8% run up today. So you're getting a lot of, in that same space action. Even Meta, and Mark, God help you with Meta. I don't know what to say. So this is Mark's love interest, I think. I think if he could go to bed with Meta, he would. But Meta.
So we all have our pet.
Yeah, we all have our pets. We all have our pets. Man.
Don't let the pet drag you down to hell.
Right.
Yeah. What was Nick's pet? What was Nick's stock they used to trade all the time? I can't remember. But yeah, I mean, but anyhow, we all have our little pet stocks that we kind of just love. Meta, breaking that 150 and then reclaiming it, coming roaring, but right back up, right? Up 5 points, suckering people in, and then they brought it right back down. So I thought, Mark, maybe you were going to be able to get a look below and then maybe, run up to here and go, but just was not to be, and the action's kind of just looking weak, right, guys?
Yeah.
Yeah. You did get some interest. Mark had put up Snap in the Discord earlier. Snap getting some interest in here. I don't like the chart. I have no interest in it, but it's getting a nice little trade today. If you're trading Snap, and you could have got some stuff. Could have made some money in Snap today. Really, the story to me is how the big caps have just been weak today. And I mean, you look at Microsoft. It was just while all the other stocks are running in the morning, Microsoft just, gapped down, just could not get going, and it's just staying weak. And so this chart, what do you guys see on this chart here with Microsoft?
Man, that's definitely one of my favorite companies, but that chart just is, it's definitely a little rough there. Definitely a little rough. I don't know if this has to do with the Activision deal necessarily, but I know that's dominating a lot of the
You
headlines
had
with
that, and I
Microsoft.
think
But
maybe the Adobe thing had a little bit to do
sure,
with it too.
sure.
So, Apple though, another, I actually
I
shorted
agree,
Apple
Mal.
here
I think
today.
Microsoft is one of the best of the mega caps, at least in my opinion. I love it. But
Yeah,
you know.
yeah, absolutely. Apple, same thing, kind of get dragged down. I still think the shitty iPhone 14 that they put out there is going to drag that thing down. But you had Apple that was weak. I mean, look at Google. Google just, I mean, just ugly. NVIDIA getting a little bit of a bounce today, but not much. I mean, look at NVIDIA. Just, I mean,
Look at what Intel's been doing lately.
I mean, these stocks do.
I'm gonna see an ugly one.
Well, I mean, and here's the thing with this, and what's interesting, and I don't know if people have seen this or not. I got to pull up my Evernote. It's coming up. So the interesting thing, because I want to get the statistics right. So you have Europe really effing themselves with Russia, right? I mean, Europe basically is, they're stuck to, from a structural standpoint, that they need Russia and they're self-imposing harm on themselves, and that's why they're going to have a cold winter, as literally speaking. But the United States and the rest of the market also is kind of beholden to China, right? Because China, with Taiwan Semiconductor, Taiwan controls over 65% of the world's semiconductor supply. And controls and Taiwan Semiconductor.
That's why TSM is the largest in that sector by far.
They control 95% of the world's advanced chip market. So I don't know if you guys have noticed what's been going on, right? How Biden came out with this act, right? And so basically, AMD, NVIDIA, we talked about this, why we were short biased on those.
Yeah.
They can't send chips over to China. Okay, so there's limitations on where they can send chips, and they have basically been shut down in their hall. And so I think a lot of people feel that, and the one news story that we didn't talk today, which is to me the most important news story, was the fact that China's over in the over in Asia, meeting at there's some kind of Asian conference. They had their meetings with Russia today and Putin. So
yeah, I think probably because this is like, they've done a couple of these now over the last couple of months. So I think every one you get a little less of a reaction until something changes in the meetings. But yeah, that's true. We didn't mention that they did meet again.
I think this is the biggest, this was the biggest news event today in the sense that, I mean, if China decides they're taking Taiwan sometime soon, and that they're going to back up Russia, and that we've already seen record trade between the two, well, that becomes a problem, even more of a problem to throw into what's going on, with what the West is doing. So it's definitely something to watch. China is the only nation really that's not doing tightening; they're doing easing. Right, because of their economic situation.
I was gonna say, but they're having issues.
They're having issues, all right. But at the same time, where the West is hiking themselves to oblivion, ready to just crack their economy, you could have a situation where China maybe gets strong in the end of 2023, as the rest of the world is now, living with the overcorrection that they had from their central banks. But at the same time, we also had the World Bank come out and say that they think that central banks need to go another 200 basis points at least to kind of counteract inflation, which is what we talked about. So anyhow, the semiconductors being weak, a lot to do with China, stuff like that, a lot to do with the weakness, obviously, in the economy. So I'd be staying away. But still, just seeing a lot of the big cap stocks kind of just being weaker today was definitely a sign for me that, okay, well, that's definitely something maybe to make a little note on. Going through the list, though, and I'll go through real quick, Nick, because I want to get your take, too, on the Adobe situation, because that thing getting taken out to the woodshed. As far as the stocks we traded, we gave out recommendations on Airbnb. Second day in a row, just really good trade. We had this great dip buy opportunity here. And then you had this nice flagging opportunity, which we called out in the Discord, which gave you a nice little trade out of here for a couple points. So, and again, that's all we were kind of looking for as far as that. You had Netflix, you had Airbnb. Plug was another one that we were kind of looking at, and it gave the run up right out of the gate here. You know, it's just nice little flag in here. And if you caught this flag, we gave the recommendation right in here. You could have got yourself a nice little point in Plug as it was doing its thing. Rivian was trying to stay strong, just whippy all over the place. It was a better dip buy yesterday as it gave a nice drive out. I kind of said it was going to be a little bit more timid today. We had a great call out on STEM yesterday. Recommended holding it through the close, and you know, nice run up to 18. And this chart, look at this chart, Nick. I mean, I just love this chart. I mean, just great. And in a market that's been really weak, this is a good stock. I mean, it's a good chart. It's hard to find some of these charts. Guess what was on the list today? DraftKings.
Was it?
DraftKings.
Oh, is that the thing that Desire put in the chat about ESPN wanting sports betting on Hulu or something like that?
Oh, really?
Something along those lines.
I don't know. DraftKings was on the list. It was, yeah, I mean, you got the football season starting up. Does pretty good. Had a good run up into yesterday on that news. And then it just gave us a nice little opportunity right in here on a flag in the VWAP. And, you know, just really nice. I mean, if you're getting a point and a half on DraftKings, you're doing yourself pretty well right in there. Another stock, this ENVX has been on the list every single day, and it's just been incredible. I like the chart, kind of another one of those charts kind of holding up on the island right there. But gave a nice little dip buy in here. It went, gave another little dip buy in here, I guess. I wasn't really paying attention at that point. But ENVX has just been incredible. It gave us great action yesterday. So, been on the list every day. And the reason it does good is because just look at the upper time frames. It's doing well. This alt was such a good trader yesterday. You could have, it did well again today. Kind of zoom in here. And, we called it out on this bottoming, kind of bottomed in this zone rating here that we had been talking about pre-market, and held nicely, and it gave you good level to trade against and give you a little bit of a run. So nice little run in on alt. Let me see. Sophie, I was a day early on Sophie. Sophie doing its thing today. Nice little run up. We lost money if you would followed us yesterday. Just small. It was like break even, but it's finally doing its thing today. So up 60 cents, but we didn't have it on the list today, and just kind of a day off. Now I recommended Nick a Costco short.
It's funny you took one of the ones I was going to say, because last time I was here, September 7th or 8th, Costco was one of the ones I talked about, and I said, all right, we're bouncing off the 200-day. This is kind of do or die time for it, because in the meanwhile, $1.25 tree was dying, and all the others were dying. Walmart was dropping at the time, and Costco I think was a fantastic short.
Nice little head and shoulders pattern here. We called it out this day, and it's just I think you got some run. Yeah. I think you got run at least to 490. So I like this one a lot. So I did want to point that one out, because we did get that going. A couple others, Uber still doing its thing.
Yeah.
Doing its
Uber
thing.
Baby.
And I haven't traded it once. I haven't traded it once. It's one I've missed, but Uber continues to do its thing. Snow still looking good from its good earnings that it had a couple weeks ago. Really nice movement there. This wolf, I highlighted this from yesterday. Interesting chart to me. So I'm kind of got it on watch. We don't have it on our trading list yet, but I think this is one to have on watch if it can kind of break out of this area. If the markets are good, and it would be nice. And I did see LVS. I know Desire pulled that up. What's going on there?
I can't. I want to talk about. I'll talk more about that one when I pull it up. Not necessarily what's happening there, but just because I've been on the show. I was on September 7th, 8th, and then I was on I think a week or so before that with Tyler. And both times I talked about cruise lines versus airlines because it was kind of my fun project, and it's doing exactly what I thought.
Well, look at this, and I got to give Michael S., who is our resident, where we're getting our inside information on. From the train strike, the railway.
I'll be sure to tell the Feds that when they ask me where I'm getting the info from. Yeah.
Yeah, no worries. Like Tyler said, what the hell are you going to do with it? I mean, we wouldn't be buying stocks. But anyhow, this RCL, he's been recommending this for the last, all through the last couple of weeks. He's been following this on, this active sequence up, and so I hope he traded it today. Who knows? Don't even ask me why it's up to 50. Mm-hmm. I have no answer for you why they would be up, but he did well. So anyhow, another good day. It wasn't as good as the day before. Mm-hmm. EMPH took a little bit of a loss on that one. We had such a good day with this one yesterday, but I mean, we were looking right here. If you look, I was looking for, it wasn't that break. It would have actually made some money, but I was looking to pre-position in on this, like a little trend line break, and they didn't do it, and they dropped it off. So small little loss on that. Just trade that just wasn't going to work, wasn't to be. So that's what I was kind of looking at. It was before it even dropped down into these levels. So, not to be had, not a good trade for us to really kind of
nice little dipsy doozy here on the SPY over the last 2 minutes, just kind of flirting back below VWAP.
Yeah, I mean, look, this is exactly what it's going to do. I mean, it's so funny. And this is the way it's been, Nick, because you've been out for a little bit, right? So we got a resident bear, Mal. He's he's stripping naked in his bear pajamas every time the market's dropping and getting excited, and then Mark was our resident bull who thinks, God bless his soul, thinks we're going to the moon. And he's the market gets back above VWAP and he's running to the, running around with party balloons and shit. Yeah. So that's what a bear market does, man. It pisses off the bears and it pisses off the bulls.
Oh, yeah. Alrighty. Well, a party. Or are you just saying it's a party? That's not PRTY. Sorry, Bordelon. I thought we actually had something moving. Anyway, so to talk about some of the other stuff. So I'll start off with the.
But I didn't talk about HKD. Which I forgot to talk about that one. And we were looking at AMTL because it's the same freaking company.
Yeah.
But it just.
So anyway, SPY's still kind of ticking here, see if we get back down to lows and then see what kind of messiness it does when we get down there. No surprise there, frankly. Anyone who bought above VWAP is just
chaos. Mark says chaos. It is chaos, man.
But anyway, so just to kind of speak a little bit more on the Adobe drop, because Adobe having its worst day in I think like the last 12 years or so, getting a nice little haircut here. So they had two things. They had earnings this morning, which disappointed, not embarrassingly. They beat on EPS, but they missed on revenue, and I think their guidance was a little soft. But then they also had a nice fat acquisition. We haven't had one of these in a couple of months, very few this year alone. So they are buying a company called Figma Balls. For about $20 billion.
Which isn't like 40 times like freaking revenue or something.
Right. So, yes. But Figma is kind of, yes. So the Figma is, and Figma is specifically there to compete against creating anything like website applications, logos, things like that, graphic design, stuff like that. And Adobe, I think it's like XD or whatever, is like one of the main competitors. And basically Adobe XD fucking sucks. It's terrible. If you find a website developer that's like, oh yeah, I work out of Adobe XD, just go somewhere else. Go somewhere else. Because if you go to any kind of thing, they're like, it's terrible. And so Figma is like the new hot upstart that most people use, I think. From what I've seen, when I went to look at the reaction, I went to a lot of Reddit threads, I went to some other forum posts and like tech blogs, and everyone was like, well, fuck. Because everyone uses Figma because they have a very, very nice, friendly, free version that you can use. Free. That's a big reason why their annual recurring revenue is so low. It's like 400 million right now. But they've got a very large portion of the market and a very fast growing portion of the market because they're kind of the new cheap upstart that's not making a ton of money, but they do things a lot better. They do have problems still from what I saw people say. But they don't really charge many people so that much from what I've seen. So people are saying, oh, they way overpaid, and they probably did. I mean, they probably did. You know, they paid 50 times, like you said, 50 times their total ARR. And they definitely is a pricey thing, but they're pretty much getting their biggest competition now, to the point where all the forums and threads that I saw were just burning it down because they're like, well, great, now Adobe's going to either throw it on the subscription model or they're going to put a nice fat premium price on it now. And so we'll see if they do that, because Figma was definitely like the fast grower. Definitely the big mover. It's very efficient company. They have like 90% margins, very positive operating cash flows. So it's not like this company's bleeding and not making money. It's a very lean company. It's a very, fast growing company. So, and they're doing the sector very well from what I've seen in my little bit of research since hearing about it this morning, and seeing all of the Figma nuts jokes. So I'm guessing that this is a combination of people thinking they're overpaying while they're missing on revenue. It could just be people just not wanting to buy Adobe up here. You go to a longer term chart, we're still up here to an extent. We're still a little pricey. It's we're still just kind of breaking this giant head and shoulders on Adobe with the shoulder cut off. Adobe hasn't been an in play stock for like 2 years now. I mean, if we go from the peak, I mean, I think that today just kind of what Adobe's been doing anyway, to an extent. Maybe this is the blow off bottom. I don't know. Maybe people really do. I haven't looked at that much. Maybe they really are overpaying, like people are thinking. I think also with some of the stock they're offering, I think there's one analyst came out and said, well, this may work out in the long term, but there's going to be some near term dilution and some things like that, with the generous stock bonuses that they're offering the people and things like that, from Figma. So. I don't know. It's very interesting. It's a nice fat deal. And it's 50 times MAU, but it's that's, I think, the big concern is people thinking they're overpaid. I think maybe it's a knee-jerk reaction. Adobe also has the problem that it's used by the creative crowd doing ads, design, and whatnot. I guess the sector gets cut down in recession. Sure. Sure, but this is also grabbing a very large portion of that market where I think there's going to be probably some big antitrust hurdles to jump over with this merger as well. That's how big it could be in the sector from what I've seen. Yeah, I mean, but you're always going to have that sector there and that space, especially with the cloud, especially with creative growth. It is Adobe, and Adobe's been struggling anyway, so it's just kind of on top of that. Now they're also paying a very hefty premium for a very lean company, very small, growing company. But maybe this is something that is going to work out very well for them further down the road. I think it's just short-term pain that people are looking at as a reaction to this, would be my guess. But yeah. So there you go. That's the Adobe.
So Mo wanted us to take a look at
good old AMD.
AMD. My target's 40.
Mm.
If you look at the weekly chart, the weekly chart gives you the best view, I think.
Yeah. This is a pretty important level that you don't want to see Adobe drop.
Yes.
This 70 kind of 3-ish. Like, I don't care if you're
AMD, you mean.
Or AMD, yeah, sorry. If AMD drops this / the 200, you're probably going lower quite a bit. So
mark my words, and maybe not 40, but I think 50. If we have happened what we think will happen to the market, and where we think could happen to the economy and such. I could definitely see it breaking at 200 and coming down to 50 and then bouncing.
Yeah, I think 50 could be definitely a good
Which
target to look at.
I would be backing up the truck.
Sure.
Whatever truck, if I got to borrow a truck, I'll go borrow the truck.
Yeah, I like this kind of range in here. I would definitely love it if it got in here. Love AMD as a company. We'll have to see AMD and Intel. I mean, God, look at Intel's weekly. Oof. Look at their monthly here. Get a bigger view. Oof. Man. But yeah, tried looking at AMD from a value standpoint, but really no idea how to judge them. Risk is that a ton of demand was pulled forward and their earnings collapse. Yeah, I mean, that's the chip guys are having it, are going to have big earnings collapse anyway with Bitcoin doing what it's doing. They're taking a big hit in the mining space, and then also just insane costs from supply chains finally, a brunt force, showing its teeth there and its impact there, and then also people not wanting to skimp or not wanting to splurge for $2,000 cards right now.
Chips take a hit during a recession too.
Yeah, absolutely. So it's got a lot going against it. I think there will be a very good value zone at some point, but like Mike said, definitely waiting to see if we get down there first. And then also with the China stuff, and Taiwan stuff, we'll have to watch on that one. And yeah, absolutely, I agree. I mean, Adobe's obviously very, very richly valued still after the run. So that just, what they did now doesn't change the fact, doesn't suddenly make them, a bargain here. Maybe they start pulling back towards the 200 then. It's
so Apple's the most shorted stock, huh? But I was going to say they also have the highest market cap. So
one of the weakest stocks out there. Yeah, that's true. That's true. Yeah, especially with the market cap. Yeah, but that's still. I mean, Apple's supposed to be the darling, right? So.
Yeah, I mean, I didn't even see that headline. I don't know where you guys saw that headline, but yeah, I agree, Mal. I mean, it's it almost hit 3 trillion. When it was at highs. I think it did hit 3 trillion.
Yeah, it did briefly, I think.
Yeah. So yeah, you got to put that in perspective.
Yeah. And Tesla had some headlines today, but they're actually green today, which I found pretty funny. That Tesla's green today. So Tesla,
it's all based off their chart, I think.
Yeah, I guess so.
And the EV bill, the Biden EV bill, I think it's still got the momentum.
That's true. Biden EV bill definitely gonna help that. That's a very good point. But they are not, pushing forward or expanding that Germany mega plant from what I saw. And that was something that a lot of people are excited about. So
yeah, that hit yesterday. I think, of course, I think that
Mal's probably loading up his puts, I'm sure. Yeah.
Well, I mean, look, it got through a nice bar. We did trade Tesla yesterday. Nice close of the gap on the daily chart. It blew through the 200 with ease. Just Tesla holding up nicely here. And I think with that EV bill going on, at least this week, Tesla not bad.
Yeah. Mo says, look at Nike selling big. I mean, it looks like it could be setting up to sell big. It's not doing anything today, necessarily. I want to look at a weekly here. What's this line I have drawn? This is another pretty important line here. I think you don't want to see Nike start looking like it's going to make new lows. Otherwise, you're seeing this thing probably down by 70 or so soon.
I mean, I wish I was shorted Nike. I mean, they're a heavy China component. They're heavy into China. And I believe their revenues are heavy into China. And so I would think that that would be an issue for them.
Yeah, absolutely. I think last year alone, it was like over 5 billion of their revenues from China. So yeah, that's definitely a big deal. Yeah, but anyway, more judgments against Tesla, of course. I mean, there you go. Speaking of, by the way, going to some of the other stocks that I was looking at, speaking of HKD, which I'll pull up the chart since we didn't get a chance to yet. Yeah, it looks like the rug pull for the dead cat bounce is happening. Looks like it happened, started happening at noon. So this is why if you play these dead cat bounces, babysit them very, very, very closely because the rug pull will eventually happen. There was another rug pull that I saw. Was it LFST? No. This is actually another one that actually kind of interests me on the daily. No idea what the hell this crap company is, but it looks pretty interesting. There was another rug pull I saw. I saved. I just got to remember TCRT maybe. Here we are. This rug pull. So there's another example of a rug pull for you there, TCRT. Let's pull up the intraday so you can see right there, 11 o'clock, 12 o'clock. Someone finally said enough is enough. I haven't seen a headline on this one. This is
it's
just
a pharmaceutical or a therapeutic company. I'm sure there's some kind of trial news or something like that.
I looked, but let me see if the one place I didn't look was Twitter, and you never know, there may be some TCRT bull out there, a bear who's finally pumping his chest. Gosh, you know, don't apparently there was like a leak of some kind of information, but it wasn't official, so I don't know. But yeah, there you go. That's a nice little panic rug pull regardless, because I don't think you've had anything official from the company today. So that's pretty interesting. Anyway, some of the other stocks that I was looking at today, Asana, say it, but it's one of those crap companies that's kind of fighting around here. If you're looking for a short, if we fail off this 29, I think that's going to be a good spot. I know they had their good earnings like a week or so ago. And then I think I saw you guys mention it, Roblox picking up with ARK and the rest of the shit stocks. I mean, it looks good technically. I hate to say it. It looks good technically for maybe a short-term interest, but we'll have to see. And then the funny thing, so cruise lines have no headlines. They have nothing going for them. But this is the line I drew right here when I was first on August 23rd. And then I came back on September 8th and we looked at it and it just followed this trend line. I mean, the whole way up, I drew this back here and it's, they're really starting to pick up some steam. And then I compared those to like the airlines where I drew this nice little descending trend line. And guess what? The airlines haven't fucking gone anywhere. So sometimes trading really can be that easy, or at least finding what's in play. And so the cruise lines are continuing their nice squeeze. I think I saw Mal say he's getting his puts ready for like CCL and stuff. But I think the whole travel sector is kind of picking up a little bit for no real reason at all. Airbnb is picking up a little bit here. They're kind of sitting up near highs. Almost look like Airbnb wants to break out. I think Expedia is green or was green. Looks like they've kind of faded off since the morning. And then TripAdvisor, I think, has been green last couple of days. You're getting a little bit of just some green action in travel for some reason, minus the airlines, because fuck the airlines. American Airlines green today. So is Delta, actually. So you're getting an interesting just movement here in the travel sector. I think the cruise lines are just kind of the ones that are getting memed up higher, maybe. But no headlines, but good action. Good action, that's for sure.
That's why I went into my Airbnb last couple of days.
Yeah. It looks like it. I mean, it's still kind of holding. Might try. Yeah. Store got acquired, quick 20% up on REIT is not bad. Too bad Warren sold his shares last quarter. Did he really? Well, that's Warren. I'm sure unless Warren was actually playing intentionally for an acquisition, which I don't think he usually does that. He probably won't lose sleep over it. But I think George Soros liked this stock as well, if I remember correctly. But I'm not positive. But yeah, nice little acquisition there. On the REIT, there was another small stock with a headline today. I think it was that LFST. No, it wasn't LFST. It was Beat. Beat is up, a little small therapeutics company up because they are going to be presenting. They had some good news today, and they're also going to be presenting at something, I think, in like a week or so, the 20th. So maybe keep an eye out on this stock next Tuesday. If this continues to run into then, and then they have the event, maybe that's the sell the news event that we get. Who knows? But maybe you get a better opportunity if that one continues to set up. And then other than that, XBI looks interesting. I hate to say it. I'm gonna give Bordelon heartburn. But XBI, if it can get over the 200-day and got some slight-ish descending highs that it's trying to do, but we'll see.
Yeah, it's kind of sitting there.
Yeah. holding higher. So it's green pretty steadily up 1.5% today. So, we'll see what we get on that one. Oh, this SPB. Here's another little rug pull for y'all. Look at this one. So this is Spectrum Brands. They were being acquired by some REIT or something. And today the Department of Justice came out and is suing to block the merger. So whoopsies, there you go. From 60 down to 50 so far. Yeah, nice little kick in the nuts there. Not really. Well, I guess there was a trade in it because the news came out. Let me see exactly when the news broke. Looks like 10. It looks like it was like not long after the open, and you had plenty of follow through in here after the headline. You had plenty of stuff. You even had a little retest of VWAP that you could have shorted off of. So there was plenty of good day trading opportunities in here if you did see it. I wasn't paying attention to it, but pretty interesting there. And then the last thing I wanted to mention was my favorite shit stock that I do love to shit on almost every time I'm on the show. Alibaba, sitting on a nice ledge here. I don't know. Looking like we want to
which I believe is close to its IPO price.
Yeah, I think I might have just deleted the IPO price off the charts by accident, actually, because it was in my way. Yeah, so here we go. IPO price is 92.70. Yeah, so we're just below it. We just kind of failed off of it. So
yep,
right here. I'll extend that to the left. Yeah, so just another stock that I love beating up on. That was it for me. Not much else to really talk about, especially, when you got the headlines flying today. We've got some China red folder events tonight, I think. Actually, speaking of China, I think they've got some economic data tonight.
And you got tomorrow morning, you got inflation CPI for the Eurozone. So that's going to be an important number. And then, of course, you got 10 o'clock Michigan sentiment survey.
Yeah. Yeah, and next we've got quad witching Friday. You got the Fed next week, so we got all sorts of fun stuff out there. Fun stuff. Yeah. Yeah, I don't know what that is, Bordelon. That's interesting. So I'll share the screen real quick. This CNC looks like it had a nice little drop yesterday. Went from 90 to 82.50. And I don't see any headlines on it. It presented at a JP Morgan conference on Tuesday, which was this day, but it just kind of got absolutely obliterated below VWAP yesterday. I don't see any headlines on what this was, so it looks like they might be snapping it back up today, which is pretty interesting. If there wasn't anything, and that was just people hitting out, for fear of there was something. So I don't know. Lost some Medicaid contract in California is one tweet that I saw from someone with like 10 followers. I don't know if that's real or not or what's going on, but interesting. Nice rebound off VWAP there. If that was something that like a filter had caught up for anyone, but anyway,
yeah,
that was it for me.
No, that's good. That's good stuff. Market's still chopping around here.
Yeah.
Down at the, down near lows, not at lows, but
yeah.
I mean, this is just stay out of this chop.
It's probably going to do this for the rest of the next 24 hours. So
yeah, stay out of this chop. It's just not worth it. And at some point, we're going to get better market.
Yeah. That's someday. Cool.
Well, nice having you, Nick, again. Yep. That was nice. Good stuff.
Yep, it was good seeing y'all. I appreciate y'all for tuning in today and hanging out with us all. And yeah, it was good. Good chilling. I don't believe they're doing a show tomorrow. No, they don't usually do them on Fridays, and I can't imagine Quad Witching is going to present anything of an event.
Yeah,
by 1 p.m. We'll probably be right here still, like in terms of the market. So there probably won't be anything to talk about.
You're going to be frustrated. Just walk away, Mo, tomorrow.
Yeah.
Walk away from the market.
Yeah, I'm not expecting
go operate on somebody.
The action may hopefully come next week in the follow-up once all of this happens. But we'll see, we'll have to see how it is. So most likely nothing going to happen.
Mo, tomorrow's a great day to go to the baby store and to buy all the stuff that you need to build up the nursery. Matter of fact, if I lived in Michigan with you, I would be right over there helping you.
Yeah, exactly. Get some of that fun stuff done. Alrighty, cool. Disney removes 2 films from 2023 schedule,
Yeah,
delays
I
another.
saw
Which
that.
films?
Star
Any
Wars
films?
film, Rogue Squadron, and
Man,
they can't get their shit together.
Oh man. Oh well. All right. Well, we're gonna wrap this one up. Really appreciate y'all for sticking around with us today. Have a great rest of your day. I'm sure they'll be around in Discord as well. And then we'll see y'all on Monday. So safe
Thanks,
trading,
guys.
everyone.
Safe trading.